Good morning or good afternoon, depending on where you are this lovely Friday. We are broadcasting live from sunny Orlando, Florida. My name is Mehdi Taifi, and I am the North America and Europe training manager for FX Logos. I have spoken at some point with some of you guys. I recognize a couple of names from the previous webinar that we've done. So thanks again for attending this one. And for the new names that I'm seeing, welcome and thanks again for joining us today. And in this webinar, we wanted to help you understand how to be consistent in the market and why many of us are not able to be consistent, mainly because of all the efforts we make trying to achieve consistency. All of those efforts are mostly useless. Why? Well, they are useless because we continue to have the same ideology that is feeding our egos, and that in turn will never lead to consistency. All you can do is become aware of what you are in the market and what the market is, with or without you, without prejudice. You can start seeing it for what it really is. When you achieve this, your problems will most likely end and you will start seeing different results. But if you try to control it, you will most likely fail. So when the Japanese warriors were taught how to use a sword, the first thing the teacher tells the student is, if you're going to be a good warrior, you must be constantly alert because you never know which direction the attack is going to come from. Now, do you think it is common for the average person to try and be alert? Sure. Many people think they are being alert when trading or whatever else they are doing. But if you think the same way about being alert as most other people do, then you will simply be an easy prey for the enemy, because you're not really being alert the way you should be. Your notion of being alert is not really the proper notion. We have to realize that to be alert is to simply be awake and relaxed, and all your nerve endings should be working together as one. And wherever the attack comes from, you will be ready to act properly. They compare it to a barrel of water. So the water is in the barrel, it's not moving, but when you make a hole in the barrel, then the water is immediately ready to go through that hole. It's the same way when the mind is in a proper state. It is ready to respond in any direction from which the attack comes from. So this student is no more alert in the sense of thought and anxiety while anticipating from which direction the blow will come from. The warrior then has cat-like reflexes and acts fast when something happens because he does not have to overcome any contrary fixations. If you are fixated, expecting the attack to come from one direction, but then it ends up coming from a different direction, you must retreat and go from one direction to another, but unfortunately, that can be too late at that point. You can, however, stay in the middle and don't expect the attack in any particular direction and naturally react to the attack as it happens. Now, the same way can be applied to the market, right? You can come to see the market differently. You can prepare, focus too much, trying to be very alert, but all this will teach you is what not to do and how not to use your mind properly. This will sink you deeper and deeper in what we call the hole of subjectivity. You have to learn to let things happen just like you should let yourself go to sleep, right? You do not try to go to sleep. You also let your food be digested, right? You cannot try to digest your food. And thus, in the market, one allows himself to wake up and understand what the market really is and does without intervening, and then you will realize there is no way to force things in the market. We help you to really be aware of that important fact, and we try to show you how to take advantage of that market as it is, not as you try to make it. For most people, That is the only way to make them stop forcing things to happen in the market, because they think they have control. But let's be subjective and realistic. We have no control of what the market does. Okay. So you must learn how to trade without forcing, as we were saying. We have been conditioned with this ideology by the industry, which tells us that we will not succeed unless we evolve. We are human, and if we don't make any effort, nothing will happen. We are conditioned to think that our job is to determine what exactly moves the market and where it will go in order for us to become consistent. Excuse me. In other words, all this is based on our lack of understanding. That's why we keep trying different combinations of all the popular wisdom when that's exactly what leads us nowhere. This is why this is important. So trade in real time and understand how the market works. So that person in the hole of subjectivity can realize that trading is like diving into the water. You do not need to take diving classes or read diving books or pay attention to your posture, when in reality, when you're about to throw yourself in the water, there is nothing more than just jumping into it. I find it difficult to say what the main topic of this presentation specifically is. So I'm just going to take a couple of examples, all right? We're going to talk about a couple of different things to get your mind to start thinking in the right way, to start thinking in the right direction. Now, the first thing that we have to do is get some background about the basic ideas which influence our everyday common sense, our fundamental notions about what life is. And there are historical origins for this, which influence us more strongly than most people realize. Ideas of the market which are built into the very nature of the language we hear and use, and of our ideas of logic, and of what makes sense altogether to us. I call many of those basic common ideas myths, not using the word myth to mean simply something untrue, but to use the word myth in a more powerful sense. A myth is an image in terms of which we try to make sense of the world. Now, for example, a myth in a way is a metaphor. If you want to explain electricity to someone who doesn't know anything about electricity, you say, well, you talked about an electric current. Now, the word current is borrowed from rivers. It's borrowed from hydraulics. And so you explain electricity in terms of water. Now, electricity is not water. It behaves actually in a different way, but there are some ways in which the behavior of water is like the behavior of electricity. And so you explain it in terms of water. Or if you're an astronomer and you want to explain to people what you mean by an expanding universe in curved space, you say, well, it's as if you have a black balloon and there are white dots on the black balloon, and those dots represent galaxies. And as you blow the balloon up, uniformly all of them grow farther and farther apart. But you're using an analogy. The universe is not actually like a black balloon with white dots on it, as we all know. But this is the analogy. So in the same way, we use these sorts of images and forms to try and make sense of the trading world. For this reason, you frequently see the language of forms in figures, as it is the language to make sense of something that is reflected in our monitors. The problem, and at the same time the reality, is that nobody knows for sure, watching from a monitor, why the market moved up or down. It is only the representation of candles and shapes. But the fact is that what remains in the past does not necessarily mean that it will repeat itself, since nobody knows the substance behind what derived that movement. Therefore, it becomes exactly like if I said to you, hey, John, Rob, David, check this out. I get up at 6 a.m. in the morning and exercise 30 minutes, and take a shower, and as soon as I get out, the sun starts to come out. In this example, you know that the sun does not come out because I performed these two activities I mentioned, which are exercising and taking a shower. The sun comes out for other reasons that are independent of the facts I claim. But if you actually went back in time to study these two activities during weeks and months, you could actually pull a statistical data in history, and you actually will realize that there is a strong correlation between these habits I mentioned and the sun. You will have a percentage, a chart, to prove your theory. But what is really happening? You are basing your conclusions that the sun comes out for reasons I mentioned. Again, based on your theory, you're taking a shower, you're waking up, you're leaving at a certain time, and based on that, every time you do that, the sun comes out. So, do we understand that we can argue that point? And based on our data, we can believe that that's the case. But because you understand that the sun will come out whether I wake up or not, take showers or not, then you see it from a different perspective, right? The market is the same no matter how good and logical I may sound and how many years of experience I may have. We don't really know why something happened. Everything is just an attempt to give an answer to something we don't know. This is a strong reason why there is no logic on going back to the past. Okay? There is no logic on going back to the past and coming up with percentages and theories and analysis and rules of something that is already in the past, that nobody knows the exact reason why it happened, why it moved that way, and how it moved. But yet we can understand that the past is going to be there. It's irrelevant how we analyze and how we see that movement. We can go to the past and we can be sure that the market moved. That we know. And that is exactly what matters. As long as the market moves, there is a chance to make money without specifying what movement is good or bad, or why it moved one way or another, why it went up or down or south. Okay. If this sounds familiar to you, it's because you are conditioned with this ideology that tells you that by interpreting the past, you will determine the future. That is why you go back and observe past data with prejudice, looking for specific forms and patterns in past movements which give you some meaning or logic to what you are doing. The problem is that you begin to understand that the same pattern or figure may be similar but having a total different content. Therefore, having a fixation on something based on interpretation and not on something objective. This is the reason why we have thousands of opinions out there. We have thousands of opinions of what the market does and why it does what it does. This becomes literally a myth that is repeated over and over and over again, and that is transferred from generation to generation, making people believe that somehow they can be consistent winners interpreting data and predicting what the market is going to do. In other words, people think they can be successfully trading most of the time based on that ideology. When you become aware of what really happens in the market without your influence and are aware of yourself and how insignificant you are in the market, then you will understand your role in the market. You will understand that your role as a trader is not to be consistent because the market is already consistent and it keeps moving regardless of what you interpret, believe, know, or think. In that it does the same thing over and over again. So the market is naturally consistent in many ways. Therefore, you have to be disciplined and have the psychological skill to follow and adapt to the consistency that happens without your influence. So a lot of people understand discipline in the form of weighing as if discipline is something that is extremely unpleasant and which one should endure. But that's not the real secret of discipline. What if instead of discipline we call it ability? Okay. Discipline is a form of expression. For example, suppose you want to engrave what you feel like in stone. We know that the stone is not easy to engrave. That's why you have to learn the skill of or discipline of a sculptor to engrave your thoughts in stone or anything else. Anything you do requires having a skill. It is essential to understand that any pleasure or achievement requires the ability to do it and perform it. For example, if you have money to buy a yacht, first of all, congratulations, that's wonderful. But this would not be possible if there were no people who may have the discipline or the ability or the skill to design or manufacture those yachts. Another example, let's create a melody. Think about somebody who wants to create a melody. They don't have the skill to do it, though. Say you have thousands of musical tones in your head. But if you don't have that ability, again, to write and create a melody, those musical tones don't really matter, do they? You may have inspiration, but you need technique to express that inspiration. Therefore, in the market, you need to develop the ability to follow. You need to develop an ability to intercept, to understand the market movement and its consistent movement, just as the Japanese katana student develops the ability to be prepared for any direction from which the attack might come from. You need to develop the ability to follow the consistency of the market. And once you have that ability, then that inspiration, excuse me, that inspiration or intuition can be expressed because you have the ability to follow, price, think in probabilities, and accept risk. That's the key. Do you realize how having the skill does not necessarily mean having knowledge? That's very important. So look at the juggler, for example. Do you think he spent time reading books about the law of gravity and physics to be able to juggle? No. What does he really need? And 1 second, I'm just, I apologize about that technical issue. I was also going through some of the chat and some of the notices there. So just with this last point, as I was telling you, again, based on your own experience, and I just wanted to have a couple of minutes just quickly see what your responses are. And I'm sorry, some of your comments are very intriguing. I want to respond. There's a couple of questions, and I'll try to do that later on in the presentation. But right now, just if you can type in what you think is something that would be a necessity, skill or knowledge. And I know that there's a debate about this, but just to get your opinion and see how you're looking at things, if you can just type in the chat, literally either skill or knowledge. What do you think? Yeah, and I apologize about the screen we got there. The picture is it's pretty crazy, isn't it? All right, so some people are saying both. Some people are saying skill. Just give it another minute. Give everybody a chance to respond. So there's some great responses. Someone mentioned something about practice. Great point. But again, if you think about it, what are we practicing? We're practicing the skill or the knowledge? Okay. With the musical instruments, yeah, someone has the skill, but not necessarily the knowledge. Very true. These are all very good answers. And it's just a matter of, again, getting you to think in a different way. And hopefully that helped you just raise more awareness about that particular point and how you're going to go about the education and your training and just understanding the market in general. So we'll go ahead and continue, but I do appreciate all those answers. Now, what is a repetitive sequence of events? Since this is the topic of today's presentation. We talked about patterns that are interpreted with prejudice, but really, what is a constant and repetitive sequence? Let's talk about a couple more examples, just to make sure we understand the point across. All of us are different sizes, colors, and have different customs, and we can talk about many things that differentiate us from one another. And yet, despite these differences, we all eat from the same place, except for extreme cases, of course. So our mouth is a repetitive pattern. In a university, for example, students change every 4 years, different teachers come and go, new subjects are implemented or upgraded. It may even have different types of maintenance, but ultimately the repetitive pattern is the same. It's the university itself. There may be those who say that exercise is best in the morning, and those who say that it's best in the afternoon. Those who say that you shouldn't be wasting your time in trading or watching TV. Those who say that time is to prepare for the future, and those who say that time is to enjoy in the present, in the now, in the here. But at the end of the day, no matter how you interpret or use your time, time is itself a repetitive pattern. Because tomorrow, unless the world ends, we will have the same time in this exact same moment. There are many more examples. And the same thing can be said about the market. In fact, the market has a repetitive sequence of events that happen regardless of what you think, know, or believe. The same market maker business model creates such repetitive sequence of events regardless of their manipulation or how they're taking advantage of it. Those sequences remain constant, not in form, but in content. So enough with giving examples and analogies, and let's dive into the live markets. Let's take a look at some charts, and let me pull it up here a second. And we're going to look at how you can see those repetitive sequences of events that we were talking about. Okay, so this is a 4-hour chart. You can see this is a euro-dollar currency pair. And so the first glance from looking at this is that we see that the market moves regardless of our ideology. Again, this is one thing that I wanted to make clear. And it's hard to understand sometimes. Some of us have been in the industry for a while. Some of us have been trading for a while, and they've developed specific strategies that made sense to them. They see it fit. They see it as a strategy that would work. They're predicting the market movement because of those strategies. So when you try to look at it a little bit differently, sometimes it's difficult. It's a challenge to change the way you look at it, I guess. It's the same chart, but you're just going to look at it a little bit differently. So, again, this is a 4-hour chart, and this is the whole week on those boxes, as you can see. And if I encapsulate the days, all right, you're going to see 5 days a week, okay? And if you're noticing something, you're going to notice that I'm starting to see repetitive sequences, okay? Now, one thing I'm going to post right now with my mouse, you'll see that I'm posting on, that's a Monday. So again, that's the week, 5 days a week. And then I'm looking at a Monday. Now, do you agree that next week we will have a Monday again? Yeah, I think that's pretty simple. We have a Monday, and on a Monday it's 24 hours. The start and the end times is going to be the same. That's the same time, right? We agree on that? If you want to post, if you disagree, please put it on the chat. If you have a different way of looking at it, let us know. But that is the common wisdom. And that is something that we see one day, day in and day out. Again, that's subjectivity. That's of the market. That the market is giving us that no matter what. So I see here weekly movement. And the problem here is that you try to answer why it moved one way or another. You're trying to be consistent yourself, not trying to adapt to the consistency of the market. Okay? That's the problem. We want to adapt to the consistency of the market. The market is consistent as it is. So, again, let's go back to our Monday. There's movement that happens consistently. It's natural. Does not depend on you. So if I establish my Monday as a point to look at the market, all right, so that Monday is going to be a point of reference. What happens here? We can see that this week it went up. So we're looking at a Tuesday, and we're seeing, again, the market is keeping that same direction. It bounced back from that point, from the higher point, and then it broke the price range that we saw on Monday going south. So that is movement that takes place that tells us where the overall direction might go for that week. And then we have a new week where you can see what the market is going to do. So again, follow my mouse as you can see here. On a Monday, the market does what it does. Tuesday, it breaks that price range going south, and the overall direction of that week is south. Now let's look at the next week. We have Monday. On Tuesday, it broke south. The market continued going south for that week. The third day, so you will look, and I have the circles that I've posted earlier on that shows you that they're like doors. There are probabilities. You see what happened on day 1, on day 2, on day 3. I'm sorry, not day 1, but on the first movement. And then we have the second movement that I'm pointing at right now. Then we have the third movement. So if you don't see it the first time, then there's higher probability that you would see it the second time. Okay? And then if you don't see it on the second time, you'll see it on the third time. Okay. Sorry, I was reading a couple of your comments there. But I also wanted to give you time to understand the charts a little bit better and understand those points of references that I'm using. So I wanted to give this example. Hopefully that will make it, because I know it can be a little hard to understand at first when I use the circles, the number 1, number 2, number 3. So again, we're talking about how to start thinking with probability. So if you cross number 1 off the list, if for whatever prices you do, you're not seeing it in number 1, then there's higher probability that will be in number 2. And if it's not in number 2, then it's even higher for probability number 3. All right? It's like a show. Like you have to choose which door has the prize. If it's not in number 1, then it's number 2. Again, it's law of just there's 2 more options. If it's not in number 2, It's in number 3. So this is just, again, an example. We go back to our references that we use is for the Monday, and you can see and you can use actually many other references in the market in order to follow that market consistency. Remember, you don't have to be consistent. You have to be disciplined to follow that consistency, to follow price and price movement, not shapes or indicators, just price. So again, here we're looking at how it kept going south. So we look at the following week, and we see the price. So on Monday, where I just put in 1, you have the price movement. Then number 2 is that second movement going south. The next week, same thing happens. Okay. There's that first movement, second movement, third movement. You can follow any currency pair, and you'll notice a similar sequence of events. It happens, again, regardless of what I believe or what you believe or what I know. So the purpose of this is to develop an ability. All right? When someone takes the advanced training, we'll look at this in the second week, actually. Once you understand how to trade based on the market maker business model, you can use this type of repetitive sequence of events to determine if the position you entered can run for longer. Okay? You use these time frames to determine if you're going to let it run or not. This is not to enter a trade, by the way. That's a different session. And we talk about how to enter, when to enter the market in different webinars. So in this webinar, we're not talking about that. Again, on different sessions, we do talk about how to enter based on price and based on the market maker business model. And again, once you enter, you're seeing a repetitive sequence of events. And you also understand how to monitor price. As the market and price goes down, you can let it run longer. So if you're short and you're noticing that movement that's taking place within that time frame, then that helps you determine whether you're going to continue going up or down. It helps you determine whether you're going to continue going with the trend, going with the overall direction, or not. So like here, this is a perfect example. You can see that it broke that range south. This helps you determine that you can, if your entry, well, again, the entry can be intraday. So it will be at a certain point, and you're managing your risks properly with setting up smaller stops and limits, and you can let it run based on what the market does, based on that movement from Monday, based on that natural sequence of events. And this is what we mainly do with the course, with the training, is we try to explain that in more detail. I wish I can get into more detail on how to interpret that movement. We are lacking time. We don't have much time left in this presentation. This is to help you understand a different way of looking at the market. Again, the details and to actually go over more and more examples is going to be difficult. So one more thing I wanted to bring up to your attention, and I apologize. I realized that I didn't really speak that much about it, and we have a few more minutes left. So I'll go back to it and talk about, again, the law of probabilities. Like, as I said, that's a very important part. Now, do you guys hear me okay? Because I know there was Some technical issues. I think you're saying, okay, great. So there was, sorry about the technical issue there for a second. As I was saying, we need to make sure we understand the law of probabilities. And I used an example earlier of like a TV show. When you have to choose which door has a prize, then you want to use the law of probabilities. So in the first movement, and so the first circle, if you're not seeing the trend that you're looking for, and then you understand your probabilities. Sorry, there is no sound, so let me repeat that again. So again, in a context, you have one chance to pick. But if you know the probabilities, then you can eliminate the ones that you're not going to be choosing. So number one, if you know that the probability there is gone, you can eliminate that. Then you know you're left with number 2 and number 3. So if number 2 is providing you with what you're looking for, that's good. But if it's not, you eliminate that, then you have even higher probability that number 3 is going to show you the right direction. Do you see that in the chart? And this is, again, repetitive week in and week out. And as I keep going, I'm in July, August, and I can see that it's going week in and week out. It's the probability aspect of it. You're seeing the movement. You're noticing the trend. You're noticing when it breaks that range, then there is a very high probability that it would go one way or another. So let's look at this example. On Monday, we see the movement. Then it broke that range south on Tuesday. That's the second movement. I'm sorry, that's the first movement. And then the second movement is that it broke it up north, and then it went back down south on the third time. So that is the probability that we're talking about. The first movement, we crossed that off the list. Second movement, we crossed that off the list. The third movement now is a pretty good indication that this is going to continue going that one direction, which is south. So this is a good example to see that. Now, the following week, we have the first movement. It broke that range on Tuesday, going south. That's the second movement. And then the third movement is going up. Okay? The following week, the same thing, where we are right now. We have the movement of, on Tuesday, it was choppy. It went up north. It broke it north. That's the first movement. Then the second movement is that it broke the range going south. And that's where we are right now. Okay? So, do we see that? The probability of this trend right now, the probability of the direction of the market going south is higher. We have a higher probability based on that natural sequence of events of whatever is left for today, with the market being open, that the market might continue going south. Okay. So I see a very good question. Again, we're asking, how do we determine what's to come? That's that ideology that we were talking about earlier, is to try to determine and to understand why the market is going to go one way or another. But we just have to go with the flow of the market and adapt. We need to have that skill to adapt to the market consistency. The market is consistent. It's a natural consistency. We just need to adapt to it. Okay, and we're going to look at it differently. We don't have that anxiety of trying to predict and understand what the market is going to do next. But we're seeing a natural sequence of events. We're seeing how, again, with the law of probabilities, where the market would go based on where it broke that price range. We're looking at price movements too. This is very important. And this is just an example, obviously. There's a lot more that we can talk about. I wish we had all day to talk about this, but this is very, it can be simple, but at the same time, it takes skill and discipline to understand it. And once you understand it, then it's trust me, you will see it very differently. One thing I wanted to do briefly is also share with you this link, and it gives you a little bit more information about what we're talking about and about what we offer, what FX Logos will be able to offer you during the training. So I just posted the link. It's a YouTube link. It's a YouTube video on the chat. If you see that, you can click on it and you can watch it. It'll take you 25 minutes to go through the video. But it really does have some good information. Hopefully, it will clarify some points that maybe I was not able to clarify. And again, due to the lack of time, I'm not able to go into more details, especially with the live market. There's so much to talk about, and we're only looking at specific examples here. So this is the link. Does everybody see the link that I just posted on the chat? Okay, great. So most people see it. So I hope you enjoyed that video. And as far as the chart, like as we're looking at, it's just a small challenge I wanted to have for you guys. I want you to go back in time and look, give me 4 examples. I'm sorry, 1 example of like where the market changed directions, more than 4 times based on what we see the movement is on that Monday. Go back in time and see anywhere, any currency pair, if the market changed more than 4 times. Okay? So if you see that, then it's rare. Maybe happen once in a blue moon. But overall, it's pretty consistent with that movement that we talked about. So that's the challenge for you. That's one thing to maybe look into after we're done with this presentation. And I'd love to hear from you. If you do find that it's a very common instance where you see that movement breaking more than 3-4 times, let us know. I'm curious to see that. But overall, it's pretty consistent. And it's amazing how we might not have realized that before. How many times we looked at that chart? So again, if we change the ideology, if we change the way we look at it, we might realize some of those things that happen in the market that were just, again, we never realized before. And if you do see that, please let us know. We'd love to hear from you. But it's very rare. And that's the point we're trying to make, is that it's a consistent way the market behaves. And it's a natural consistency. With 3D glasses assist, again, try it. But it's just the way to change the ideology. Somebody asked, are secrets in the course? There are no secrets. It's just a way to develop that discipline. That's what we help you with the course, is to help you develop that discipline of how to look at the market, of how to adapt to the consistency of the market, how to look at those natural, repetitive sequence of events that the market shows. Honestly, we're just, they're always there. We just choose not to see them that way because we're conditioned to look at the market differently for whatever reason. So we help you, we try to condition you to look at the market in a different way. So that's the most of the time that we have today. we do have to cut this short. Um, I hope that you do understand the concept. Um, it is my pleasure. Thank you again. Um, I do see a couple. I'm just reading a couple of those questions in the chat. Somebody asked, "How are your past results?" Again, contact us. We would love to share that with you. We will give you, some of this information you're asking for. We can give you more information about how we see the market and how the course might help you with that. Again, that's what we do in the advanced training course. And we would love to reach out from you. You have our contact information. I will post it again on the screen one more time. And you can follow us on FX Street as well. But other than that, I would like to thank FX Street for the time they gave us today to do this presentation. And most importantly, I'd like to thank you guys for attending, for staying in the whole time. And I hope it wasn't a waste of time on your end. I hope that you did learn something from this and that it made you realize how to look at the market differently. We have more to share with you, obviously. If you are interested, please contact us. We would love to help you. Other than that, again, thank you very much. Enjoy your Friday, enjoy your weekend, and have a great day.